G'day guys, Jay Senior here and welcome to another episode on the Australian Wealth channel. And in this episode, we need to talk about the small cap stock crash. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. Really helps to get these videos out to more people. So you might see today, for the first time ever, I think, on this channel, I'm actually in a suit, and that's because I went and got a tailored one, so I am looking for an excuse to wear it. So this is the excuse. But anyway, that's not important. We have to talk about some of the stocks that have actually crashed in the stock market. Now, you might be thinking, well, if we look at the indexes like the S&P 500, the NASDAQ, the Dow Jones, everything looks pretty normal, you know? We're just a few percentage points off the all-time highs. So what's going on? You know, is there really a crash? We're going to delve into that today because it's actually a lot worse than people actually realize. Anyone that's kind of outside the market doesn't actually know what is going on because there's a lot going on under the hood, which we're going to delve into today. So we're going to explain what's happened. We're going to talk about what is causing this because there's a lot of things that are actually causing this particular crash, even knowing it can't be really seen from outside observers, and how you can take advantage of this and also what I'm doing. So if you like the suit, please leave me a comment. Please make sure you like and subscribe too. So there's a few things going on here. At this point, there's so many stocks that are massively down year to date. If we look at some of my favorites, Tattooed Chef is down about 36% this year. Corsair Gaming is down 40%. Palantir is down about 30%. Teladoc is down about 50%. Based on where it was about a year ago. So these are not small moves. We're not talking about like 5% down or 10% down. These are huge. Basically, the value of some of these companies have been cut in half, which is a huge move. So this has not happened with some of the bigger tech stocks such as Apple or Google. You know, they're still doing quite well. But under the hood, there's a lot of things causing this. And some of the reasons that I personally believe that we're seeing so much action and so many drops in the small cap stocks is a number of different things. And I think one of the biggest things at the moment is tax loss harvesting. So as some of these stocks have come down, there's a lot of people that are actually in the red in some of these small caps, whereas they might be up in a lot of other positions that they've ended up selling. So to offset some of those gains that they would have to pay tax on, it makes sense to sell some of the losers and then buy back in 30 days. They call this the wash sale rule. You can't buy within 30 days, but if you buy the same stock after 30 days, then you can claim that as a tax loss. Otherwise, people would just be selling and instantly buying back in just to claim the loss. So we're seeing a lot of tax loss harvesting across the market because we had such an incredible year in 2020 and the start of 2021, and some stocks have continued to do really well. And as people have taken profits, they've also collected some of the losses in those stocks. And you know, a lot of these stocks have been the perfect stocks to be doing tax loss harvesting. Like the ones I mentioned, Tattooed Chef is down big, Corsair Gaming especially. Pretty much everyone that's bought into that stock in recent times is down. So it makes sense to sell off that position and maybe buy back in because it just continues to drop, and that's what a lot of people have been doing. So I believe that a lot of this particular selling will likely clear up after December. I believe that's tax time in the US. So I think personally that is the absolute biggest one that we're looking at. On top of that, there's also Omicron fears. Now, this one I don't think is as much of a bigger deal, but a lot of traders are using this as an opportunity. Basically, anytime that there's any kind of news about Omicron that's come out, a lot of those leisure stocks are getting absolutely slammed, and we're seeing a lot of the other stocks such as Moderna and Pfizer have actually gone up. Any single time that is a big news story. So it's a great opportunity for traders, but at the moment I think that's all pretty much short-term noise. Basically, what we've seen from this particular variant is it looks like it's not as bad as some of the other variants that we've had, such as Delta. Now, obviously, we still need to wait a little bit more so we can get more of an idea of what's going on. But at this point, the Omicron variant has killed less people than Alec Baldwin. Something else that's worth noting is that there are a lot of inflation fears, and anyone that lives in the US and even Australia to some extent has seen the price of things go up drastically. Things have become significantly more expensive. Who would have thought that printing more than 25% of the world's money supply in 1 year would lead to inflation? Who saw that coming? Geez, I don't know. But anyway, so there's a lot of inflation in the system, especially over in the US. And that is obviously where a lot of the big money that is going into the market is coming from. So there's a real fear, not because of inflation, because inflation can actually be quite good for assets, but there is a fear that this means that the Reserve Bank is going to be raising rates quite a bit faster than what they thought they were going to. Jerome Powell basically said that he'd be looking at raising rates a little bit further down the track, but it looks like they're going to have to push that forward to keep inflation under control. Now, this is such a big deal because it makes debt so much more expensive. And what that means is that it drops the valuation of some particular companies, especially tech stocks. You know, like rising interest rates are like a lead balloon for tech stocks especially. But of course, it doesn't just affect tech stocks, but there is a little bit of fear in the market that the Reserve Bank is going to have to raise interest rates a little bit faster, and the market absolutely does not like that. We can see back in 2020 what happened when all the stimulus packages were announced, and of course the Reserve Bank dropped rates massively. We saw that the market loved that because it's just cheap debt. It makes it so much easier to borrow and grow a business. So as a result, we saw a massive rise in the price of stocks and also real estate consequently. But of course, as interest rates start to come back up, you know, there's going to be a little bit more tempering there. So for the last year, the Russell 2000 index has basically been trading in a range the entire year, which is just crazy. You know, we've seen the value of a lot of the large caps just go absolutely to the moon, but the small caps have just not seen that rise. And there's quite a divergence between these two sizes of companies. And what that means is that there's opportunity. We're seeing small caps trade incredibly cheaply in comparison. So for me personally, you know, this is not financial advice, do your own research, but for me personally, I'm seeing so much opportunity there. So I've actually been loading the boat massively. I've started to see this divergence since around July. We're now in December, so it's been roughly 5 to 6 months that this divergence is getting greater and greater. So as a result, I've invested about $72,000 since July, loading money into beaten down stocks, and I'm expecting a strong bounce somewhere in 2022. You know, for me, I'm a long-term investor, so I'm happy to hold these because I'm just buying companies that I personally believe are trading below market value. So the important thing is that you're sticking to your own investment strategy, provided that it's working. And what I mean is for the long term. You know, you might see some dips here and there. I've seen some dips in my portfolio due to this, but it's important to take advantages of these times because they don't last a long time. You know, we're seeing such a huge divergence. That's not something that happens a huge amount. So anytime I see an opportunity like this, it's one that I want to take advantage of. So I'm going to be explaining more about some of the stocks that I've bought and why I've bought them in another video. So make sure you subscribe to the channel and please like this video. If you want to start your investing journey, I have a link to Stake in the description. They're a great brokerage, and you can get access to not only the US markets, but the Australian markets. So you get a free stock if you sign up and put money in the brokerage. And I also have a link to WeMoney, which is where I track my net worth. A great app. They'll just give you $5 just for signing up and connecting an account. It's crazy. One of the best tools I've found for that. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. My name is Jay Sini. Leave me a comment about the suit. I want to hear what you guys think, and we'll see you later.